Well, first of all, this has been a great meeting so far. This is my first time attending an AFOA meeting, and I tell you, AFOA is just an outstanding organization, great leadership and a great reputation. And I started looking down the list of speakers, and when Lee asked me to speak, I really began to question why he would have me here with such a great group of other speakers. And but anyways, it's been great, and I'm here in Ed Wilson's stead. Ed Wilson is the gentleman that really began this program a long time ago, and I'm here to present a little bit about Outdoor Underwriters, but I want to go over an overview of all the products we have, and then dig deep into our standing timber, our fire damage product. Chris, can you help me pass out a few of these sheets? Probably, there's just a handful each. Thank you. So we're, there we go. We're based out of Columbia, South Carolina. Our parent company is All-Star Financial Group. They're based out of Atlanta, Georgia. We're one of about 12 to 14 niche brokers that all do business in London. And so we're a cover holder in London. We have underwriting authority. We have claims authority. We get very involved from the start to finish on that. 200 employees with All-Star. I really think what separates Outdoor Underwriters from our competition is customer service, the quality assurance that we offer, our risk management practices, and our policy wording. With insurance, the policy is only as good as what the policy says it will do. And so we try to customize our product specific to the needs of our policyholders. I serve as a program manager for our consulting forester division. Basically, it's a general liability policy, and we do a forester specialized endorsement on there to pick up for the technical activities of a forester. So management plans, prescribed burning, smoke damage liability, pesticide, herbicide applications, we have that product offering available. Hunt Lease Liability is probably what we're best known for. We have a long-standing relationship and partnership with AFOA to offer Hunt Lease Liability to its members. Some of the benefits of that program: the member-to-member coverage, guest liability coverage. We have no exclusions for ATVs or tree stands, where some other Hunt Lease policies may have that exclusion. So it's been a long-standing program with AFOA, and one that's been very successful for both of us. Guides and Outfitters Liability. I work with guides and outfitters all over the country. We do anything from the general liability associated with their business to watercraft liability to any of the property and equipment and items they use as part of their business. Timberland Liability is another program that we're proud to offer through AFOA. It's landowner's liability. We do that on a special master policy rating basis. So if you were to purchase a policy from AFOA, you would get a certificate of insurance from Outdoor Underwriters that would show that you're a policy holder. You have your own unique limit, but it's a way for us to offer the pricing at a much lower level than on an individual basis. Standing timber insurance, we've had this product for quite a while. This is really the lead-in to what I'm going to be speaking about in a little more in depth. But we have your multi-peril high limits available for your standing timber. So we can cover for fire, wind, or flood, hurricane, tornado, ice, a whole host of things. What we're running into is we had a really high, and everybody had a really high minimum premium. In many cases, it's $10,000 just to purchase a policy on an annual basis. Well, you'd have to have a timber value of almost $1 million before you equal that $10,000 minimum premium. So for a lot of smaller landowners out there, we were missing the boat. So we started trying to figure out ways, and we're still actively pursuing what we're going to call a small growers program that might have a minimum premium of $1,000 a year. And so it'd be something we could issue and handle a lot better and serve a lot more people than we could with our older standing timber product. Property and equipment. We have an office in Knoxville, Tennessee, headed up by Tom Skaggs. Tom's been with Outdoor Underwriters for quite a while. We have the ability to insure barns, mobile equipment, lodges, anything that you might think of, and we can schedule that individually. So all your miscellaneous tools, if you're a forester, all the equipment that you use in the course of your business, we can insure that as well. This is a program that we just started, one that I'm very proud of. We are working to, it's not just youth oriented, but We had a hunt last weekend that we insured and we helped put on for deserving veterans. We had 3 special operators and from the Marine Corps that we hosted and did a hunt for them. But we have the ability to handle the general liability for any nonprofits that cater towards children or military, and specifically with the hunts. But we do directors and officers coverage, and we do all the other coverages that the nonprofit might need. And prescribed burn liability, this is a product we've been working on for quite a while. It's a per burn policy that we have now changed the wording on, that a landowner can purchase if the Forestry Commission is going to oversee the burn, or if they're going to contract with a burn manager to oversee the burn. So the landowner could have some liability involved there if they participate in the burn, if they strike the match, and so we have a way for the landowner to purchase some coverage. It's up to a $500,000 limit of liability. The policy is written for 30 days, and hopefully, weather permitting, the burn can be completed in that period of time. If not, we do a 30-day endorsement to the policy to keep that coverage going. And I think the last thing before we get to the limited fire coverages, we do recreational permit policies, which would cover things that would not typically be covered, I guess, on a hunt lease liability policy. If you think about horseback riding or some of the other activities that wouldn't just be customized to a hunting club. So we can do a permit policy if the landowner's issuing permits for the recreational access to their property. Okay, so limited fire coverage is why I'm here, and I think you guys all have, this is the AFOA application, which you would probably have seen in the publications and newsletters, and I just made a copy for everyone just to see. I'm just going to go through a few key points. We'll talk about some claim scenarios and go from there. I might not need to be that close to that camera. Again, this is also done on a master policy rating basis. It's just a really easy way for us to get certificates out quickly, in this case an evidence of property, but also keeps the rates low. If you think about group health insurance, which is crazy in the world right now, but if you had to purchase it on your own, you probably couldn't afford it, but when you tie into a group, we can keep the rates lower, and it's just an easier way to manage it. We took our standing timber product and we simplified it all the way down to simply fire. So wildfire is what we're covering with the limited fire product. What we ran into before, and since it's a property product, you have co-insurance. So if you think of, compared to a building that you might own, any of those policies are going to have co-insurance, which dictate that you have to have within 80 to 90% of the value insured at the time of the loss. Well, since we're only offering up to $100,000 of coverage, we couldn't enforce a co-insurance penalty because you might by default have $250,000 of timber value or in excess of that. So what we did to avoid the need for a timber cruise and to get rid of co-insurance, we just put a per acre limit on the policy. So if you see the $25,000 limit, you'll notice that there's a $750 per acre limit. So we've never paid any more than $750 per acre, but we would pay up to that $25,000 limit depending on how the claim proceeded. We show on this application we have a $2,500, a $5,000, and a $25,000 limit. We also have a $50,000 and a $100,000 limit which is available. We handle that on an underwriting basis, so we would ask that you complete this application and send it in, and then from there we would just do the underwriting and put a formal proposal back to you, and we could obviously issue that coverage. If you have multiple tracks, we just insure those individually. Yeah, you have to have an active, which wouldn't be an issue here, but an active membership with AFOA to qualify for the product. The valuation basis, prior to the saleable value, you would have the cost of preparing the land, planting and maintenance costs for tree seedlings, and 7% per annum interest based on the cost incurred, and that's for every year. Once trees have a saleable value, is the market value at the time of loss, less any savings in harvest costs, less any salvage, which is the same exact way the standing timber product is handled on the valuation side. A few exclusions just to run through quickly. Any property other than standing timber. So if you had this policy on your property, you also had a barn, it would not cover that property, or if you had shooting houses or other structures on the property, it wouldn't cover any of that, it would just be the timber. Standing timber not located in the policy territory, so we're actually getting that eliminated. It'll be the entire country that we'll be able to handle. Caused directly or indirectly as a result of the burning of slash, so burn off after a timber thinning or just a brush pile. If that fire got out of control, that would be an exclusion on the policy. Caused directly or indirectly as a result of prescribed burn, unless in accordance with any and all applicable federal, state, county, municipal rules, guidelines, statutes, or instructions. We're proponents of prescribed burning, and so we didn't want to deter landowners that had this product from doing a prescribed burn. So as long as the person doing the burn, and if your involvement meets all those guidelines, the prescribed burn got out of control, we would cover that claim. I think probably going through maybe claim illustration on landowner A and landowner B might help it make a little more sense as it pertains to a per acre limit. These are really just kind of rough numbers in terms of what a value might be, but I'll just read through it really quickly. Landowner A owns 33 acres of standing timber, mostly comprised of mature hardwoods. Landowner A selects a limit of $25,000 protected as timber from fire damage and subsequent reforestation costs. A lightning strike causes a fire and burns 10 of the 33 acres. The actual cash value the adjuster comes up with for the 10 acres is $18,000. In this scenario, landowner A would receive for his claim $7,500 for the per acre maximum of $750 per acre on the overall limit chosen of $25,000. So in that particular case, that's the way we avoid the need for the timber crews or co-insurance. Landowner B, if you read through it, actually works opposite because he gets the full value because it was under the per acre limit. So really the per acre limit is just a safety net and an easy way for us to get this policy issued and issued quickly.